Inflation, definitely a hot topic, definitely a topic that makes a lot of investors nervous. Winnie Sun is a financial advisor, also managing partner with Sun Group Wealth Partners, and she joins us to talk more about this. Look, what's your thought, or give me a couple possibilities here for people at home who are watching, who have cash, in the bank. It's not making any money, right? Because the rates are just horrific. What are some ideas, or maybe your top idea they can do to really to make some money and keep up with inflation here?
Mike, absolutely. Everybody's quite concerned about inflation. Prices are going higher. I think that one thing I would say is there's a couple things you can do to be proactive about this. We know that prices are probably going to get higher. If you have savings in the bank, if you have more checking than you normally do, maybe look at diversifying it and having a portion of it earning something that can keep up with inflation. Because we know typically inflation's about 2.5% to 3%. We heard Janet Yellen said that actually might get even higher, closer to 3%. If that's the case and you're mostly in cash at the bank, you're earning less than 1% easily. So maybe take 10 or 20% of what you have saved up and consider investing it. And on top of that, definitely get your budget in line. Make sure you're not overspending on other areas.
So here's the follow-up to that, because I know Wall Street doesn't like inflation. Investors get spooked by it. Kind of two questions, actually. What's your prediction for the summer on Wall Street and the market? And then saying that, you talked about investing possibility with the market where it's at right now, because it's considered pretty high. Should people get concerned at all? Should they think about maybe moving their positions to cash? And I know we just answered that question, like, well, my cash really isn't making money right now.
Mhm.
What would you say?
Mike, I think it depends on your goals. And I think when do you need the money? That's what I would ask. This is what I ask my clients. When do you need the money? If they need to use the money, let's say to buy a house or a down payment, or even put money aside for a wedding in the next 6 months, that's a different scenario than if, it's money I don't need right now, but it's for retirement. If your goals are still long term, I think there's still a lot of opportunities to invest long term. However, that being said, if it's short term, maybe, taking some profits is really not a bad idea. I think right now holding some cash also gives you some buying opportunities when there's going to be dips. Now, to answer your question about the summertime, typically the summertime is relatively quiet. Sometimes the market actually retreats during the summertime. But as we know, with COVID, nothing is like normal right now. So I think to predict against the market, it's kind of hard. I mean, the economy is starting to open back up. There's certainly some opportunities I love for our clients long term. It depends on the time horizon. If you can hold this, there's going to be a buying
Yeah.
opportunities in
Yeah.
here.
So if I'm one of those individuals where I'm going to take cash out of the market right now,
Mhm.
what about putting it in real estate? You mentioned real estate, but what do you think about that as a possibility? Even though that I know prices, especially out west where we're at in
Mhm.
California, are extremely high right now.
Prices are extremely high here in the West, but also in other parts of the country as well. You're kind of coupled with two things. Like pricing has definitely gone up. However, interest rates are actually continue to be at historical lows. So you're sort of like at that scenario where if you sell your home right now, you might actually get top dollar,
Yeah.
but when you get that new home, you might also be paying top dollar. So I would say if you're looking to maybe upsize, maybe take a look at maybe seeing if you can do some construction on your home to make your house bigger. But I think right now, if you're looking for that first home, I would really do your research and make sure it's somewhere that you want, and make sure you're not overspending. We're seeing a lot of just overheated markets.
I know my wife and I have debated that, but we keep going back to the property tax. I'm like, we're happy where we bought 8 years ago. And I just keep landing like, I don't want to pay more. I mean, but I don't know. It's a debate many people are having. What about inflation and education costs? Is there any connection there or anything we should be worried about for people who are trying to save, not only for high school, but for college for their children?
Absolutely. I know you and I are both in that category. Unfortunately, inflation and education typically way
Mhm.
exceeds typical inflation. So inflation is 2.5, 3%. Education inflation is usually closer to double digit numbers, like 10, 11%. So certainly if you have children that are younger that you plan to have go to college right now is the time to start saving. You might say, well, the market's so overheated. But if your kids are like 10 years old, 5 years old, they've got time on their hands, and you want to make sure that you have something set aside for them, because we do know like a toddler this year would need about 250,000 to be able to attend a public university for their undergrad. So we're, they're big numbers. It's crazy because I think about, when you're at the hospital delivering, at that time they should tell you, maybe you should make a meeting with a financial pro right now.
They should designate like at least a 2 hour period after the birth of a child. It's a brilliant idea. I love it. Winnie Sun, managing partner at Sun Group Wealth Partners. Always appreciate the conversation. Have a great week, Winnie.
Thank you so much, Mike. Take care.
You too.